Good morning, everybody, and welcome to Strategy Cafe, your shot of leadership inspiration from Lembic Strategy. It's a huge pleasure to be back. I'm delighted to see so many people on this morning's cafe. In a moment, I'm going to be introducing Simon. We'll be getting started. The interview is going to be wrapped up by around 9. But if you want to stay on for questions, we're going to be here until just past the hour. Simon has been very generous and agreed to stay on and tackle any questions. So if you just take a moment to check on your GoToWebinar panel, you should be able to see an area where you can submit questions during the discussion. So if you put them in there, we'll keep an eye on them. We'll try and field some during the discussion this morning, and hopefully any that we miss during the conversation we'll pick up just at the top of the hour. So I hope you enjoy this morning's discussion about all things angel investing and about how the risk takers need to reignite the economy. So the agenda for today, quick introduction, then we'll be meeting Simon for discussion, questions at summary at the top of the hour, and then a quick note about what's coming next, and then back to your day. Simon, really delighted to have you on the cafe this morning. I'm really looking forward to our discussion today, but maybe this is a good slide to get you going. Maybe an opportunity just to introduce yourself to everybody, tell us a little bit about you and a bit about angel investing.
Great, Nick. Well, thank you very much for inviting me to talk this morning. I'll try and make it interesting. So I am, as you say, a risk taker. I've invested in 50 businesses over the last 10 years, almost all in the UK, mainly in technology and life sciences. And a lot of my companies have been software companies. Of those 50, 9 have exited, mainly been sold to large American corporates. 7 have failed and disappeared for various reasons. And I have 32 left in the portfolio. Some of those companies are now what we would call scale-up. So they've gone from the startup phase right the way through to scale up. And there are some of them are quite sizable businesses now and have created a significant number of jobs. So I suppose, why did I get into this in the first place? Well, both my parents were entrepreneurs. They both ran their own businesses. My mum always used to say, there's no such thing as I can't. And for me, that's kind of what defines an entrepreneur. Entrepreneurs try and find ways around things. They try to find ways to do things rather than not to do things. So that's an important part of entrepreneurialism for me. So a quick bit of background, really. You've got some of the points on this slide, but essentially what I do these days is I'm chair of Cambridge Angels. So I'm very much plugged into the Cambridge ecosystem. We can talk a bit about that. I'm also on the board of the Innovation Factory in Manchester, which is the university's spin-out board, with the aim of actually spinning out more intellectual IP out of the university in through commercialization, in through companies. I'm a very active promoter of the digital economy. Maybe we'll talk about that later, but clearly COVID has had significant, mainly negative impacts on the economy. But one of the things that we've seen from a very positive point of view is it's accelerated the digitization of many sectors of the economy, particularly healthcare, which of course we're all familiar with, but also education. And of course, we've seen a huge increase in e-commerce. So that's a quick intro, Nick.
Yeah. Well, look, we definitely must get back to that because I think all of us are aware that the acceleration of digitization in the economy has been a huge feature of the pandemic, and has left the economy in a completely different state. Which I think all of us need to just take into account and really start to think about. But one of the things I wanted to do just to get started with is really take you back to the start of it all. And when we were chatting about this, you were talking to me, and I think we knew each other around. We probably met each other around the time. I remember you starting as an investor in ViewRanger, which I've had probably since you introduced it to me and have completely loved. So you should tell everyone a little bit about that. And then also I think there's another one you mentioned called Growth Engineering. So these were maybe £25,000 investments each. And maybe that's a great sort of jump off point for, a brief overview of the specifics of angel investing. So what do you actually do as an angel investor? And maybe there's a good starting point.
Okay, so those two companies are great because they're quite different. So ViewRanger's, in ViewRanger's case, I was introduced to two guys, and it was a sort of the old Microsoft thing. Can you come and meet these two guys in Cambridge, you know, in their garage, because they know a lot about tech, but they don't really know much about business. Can you go and
Yeah.
help them? So I went and had coffee with them over an hour, and they said, well, look, you know, these are the problems we've got. And I said, well, I can help you with these. So can you? Right, okay. So 10 years later, I've been helping them. I've been on the board all that time. And we grew the business from literally those two people to 20 plus people. The business ultimately was sold to a company called Outdoor Active in southern Germany, actually. And it's now the best performing business in their portfolio of European companies. What we learned about that was, it's interesting, when we started, it was 2009. It was just 2 years after the iPhone had been launched. Remember, in 2007, the iPhone was launched.
Yeah.
And at that stage, a software tool to allow you to walk, cycle, do outdoor activities from your mobile phone and track where you've been was quite advanced. And at that stage, we had to decide which operating systems to put the software on. You know, was it going to be BlackBerry? Do you remember BlackBerry?
Yeah.
Right. Actually, thankfully, we chose Apple and Android, and of course, that was the right decision. We didn't know that at the time. And so that company's grown and it moved on later to a subscription model. And the subscription model actually was what defined the profitability of the company and made it a big success. So, so as an exit, you know, my £25,000, I did make some subsequent investments, turned into a significant exit. Growth engineering has been very different because they've tried to do it after taking initial capital in about the same time, 2009. The founder, a lady called Juliette Denny, has not actually taken any external capital at all, other than a bit of debt, which is unusual for a growth company at that stage. And funny enough, we had a call yesterday actually, and you know, she's now a sort of £3 million business, growing very quickly, impacted badly by COVID, but recovered incredibly quickly due to decisive action on their part. So a very different journey from ViewRanger. So it just shows actually how these companies from the kind of same start can end up in very different journeys.
I have really enjoyed ViewRanger as an app, as a customer. You know, being a runner and a walker, to actually be able to map onto you know, a fine scale ordnance survey on the iPhone has been incredible, and there's map routes and find routes, and to track it around. I've taken it all the way over Cumbria. And it's been a real good companion over the years. And I know also it's been a roller coaster ride. And so one of the things I was interested just to chat about is the leadership side of being an angel investor. So one side of it is being properly at risk, which I think, you know, angels are very much, you know, the initial risk takers along with their co-entrepreneurs. But also there's a leadership aspect to it, isn't there? And I think, you know, you describe yourself as an active investor, is that right?
Yeah, so there's this very good concept of understanding what it is to be an active investor and what it is to be a passive investor. So an active investor will be somebody that rolls their sleeves up and actually gets involved with the founders and helps run the company. But usually that will be in some form of non-executive capacity. So normally be a non-executive director or possibly a board observer, where you're essentially attending all board meetings, but you don't actually have the fiduciary duties of being an NED. Sometimes there will be a group of 5 or 6 investors, and one of those individuals will be that board observer or NED, and the others will be passive, relying on that one person to essentially look after their interests. And that usually works well because you usually want somebody who's got domain expertise. So I don't have domain expertise in life sciences and digital healthcare. I can apply some of the technology techniques, but if it's a life sciences company I'm investing in, I'm going to definitely rely on somebody who has got that expertise.
In your perspective, you know, how important is the leadership of the business, and you know, what are the typical issues? You know, talking in generalities rather than any specifics. What are the particular issues that, you know, that come up, and what levers do you have as an investor, you know, to tackle them?
So it's a great question, Nick, because leadership is the absolute key attribute that I'm looking to invest in. So if I think about People say to me, well, how do you make your investment decision? I'm looking for an outstanding team. They've got to have something that's differentiated in terms of technology. Ideally, they have some IP. And lastly, it needs to be a big market. That was actually what was attractive about ViewRanger, was putting that software on phones that could be sold all over the world, meant that it was a big market. So those are the four things I look for. And actually, if the leadership isn't right at the beginning, then I won't make the investment, because I've got to believe that the 1, 2, 3 founders that set up the company can actually scale this business to something sizable, are capable of building a team of, say, 150 people. That's what you have to believe at the start. Now, of course, it doesn't always go like that. And then, of course, some leaders respond well to feedback and some don't. And over the first 2 or 3 years, whether they're actually going to respond well to feedback, both positive and negative.
So that experience of how they're going to respond is something that you get just a little bit down the track, I guess, as you get into it and the challenges come up, and there's you get a sense of whether there's an open dialogue, an open discussion, and your team are in listening mode and are open to and flexible, whether they're really just going to sort of dig their heels in or be difficult in a different way. So what are the levers? How do you tackle that if you find you're in a position where you're at risk? I mean, everyone's at risk, right? But you're also at risk, and so it's meaningful engagement, and you feel in the end you do want to change. What do you do?
Yeah, so it can be incredibly difficult. Actually, removing the founders is an incredibly difficult thing to do. And
decision, right?
Yeah, and also having 2 founders, which is the sort of optimal team that venture capitalists like to invest in. If one falls out with the other, that's usually game over for the company.
Really?
It can be rescued, but it's not often done successfully. If you're trying to change the leadership team, then that's where the shareholder base is quite important. So if you can imagine you've got lots of disparate shareholder groups with all sorts of different interests, i.e. their interests are not aligned, then it can be incredibly difficult to make any change. So to make change, you actually need the shareholders to be aligned in changing the leadership team.
And so that's really the critical thing, is getting alignment around the investor group, and then there's power in that. Really, there's power in the capital. And I guess you have moral authority at that point. You could take a tougher view and just refuse more cash. Ultimately, you've got to stop if you have agreement amongst the investor group.
Yes, and there's a point here which is probably important for people who are not familiar with this to understand, that as an angel investor, really you should be looking to think about the next sources of finance. And usually for early stage companies, when they're not yet making profits, you've got to go to venture capitalists, because they're the only people that are effectively taking institutional risk, or at least that's what they're meant to be doing. A venture capitalist will not invest in a company if it doesn't think the team's right. So you get 2, 3, 4 years down the line as an angel, and you find that the venture capitalist isn't actually it meets the company, it says, I don't really like the team. They might make all sorts of excuses as to why they're not investing, which probably won't be the team, but actually worked out it's the team. So that's important.
So interesting. Just put this slides back up momentarily, and I just wanted to pick up on this. I think it's around the time of the exit of SwiftKey that we chatted about. And this slide has got a great kind of collection of. It sort of shows the breadth and depth of your portfolio. But I know in 2017 you won the Entrepreneurial Investor of the Year award. So we were chatting about this, and I guess at that point you sort of really found your length. Had a good sense of how to get it right. And I think we were just discussing, the team, the importance of the team. The 2 things that you talked about were, having some intellectual property and just the fundamental importance of the underlying technology. So tell us about how you assess that as an investor.
Yeah, so this looks like there's a lot of logos on this slide, doesn't it? That's very, very busy slide, but I think it does demonstrate the fact that there are quite a wide variety of companies that I'm invested in, and what's the theme that's pulling through all of these companies is really the application of, as you said, Nick, new technologies into existing sectors. So take Recipe, which is run by two women in London. That is essentially applying artificial intelligence to women's fashion. But I think to answer your question, around SwiftKey is a good example because it exited to Microsoft in 2015. And that's only 5 years ago. But at that point, artificial intelligence had been around since, I think, 1956. So it's not a new term. But suddenly in 2015, the world discovered artificial intelligence. And there were 3 deals that were announced that year. One of them was SwiftKey. Another was DeepMinds, which many people will know, which was sold to Google. And it was at that point there was a kind of awakening by, certainly in the UK, but actually also elsewhere in the world, that artificial intelligence was a tool that could be used by a myriad of different sectors. And of course, ever since, every single pitch deck I see from any company anywhere has got artificial intelligence in it somewhere.
And is it actually artificial intelligence, or is it just some clever software, but not actually intelligent software? How often do you see actual intelligent software in these when you get underneath the skin of it?
Well, so most of the time you don't. Obviously, if you're going to apply artificial intelligence techniques, you first of all need a big data set. And many companies do not have access to a big data set. If we think about the healthcare example, the NHS has a fantastic opportunity because it has national data. It has a fantastic opportunity to use artificial intelligence. But of course, it's got to do it. It's got to do it in a regulatory compliant way. It's possible. It's all got to be anonymized, but the aggregated data, fantastically valuable, and of course could be sold all over the world. But that's probably a way away from their focus at the moment.
So you make an assessment of the technology. You get a kind of a good feel for the team. You want to make sure that there's some protectable intellectual property in there. And then you make a judgment about whether to invest or not. And then what's your typical experience now? So I know you've had a few exits now, Simon. So what's your typical experience of how long it takes between that initial investment and getting some form of exit?
So I generally reckon now that it takes 10 to 15 years to build a serious business. And interestingly, most pitches say exit plans, question, we're going to exit in 3 to 5 years. It's very, very rare for that to happen. And in fact, you probably wouldn't want that to happen because you can't build a serious business in that time. You can build what I call a technology platform without any revenue. And you can sell a technology platform in that time period. And it has happened. It has happened to me. There's one company on here, Vocal IQ, was sold to Apple. We weren't allowed to say it was sold to Apple, but everybody knows it was sold to Apple. Right. And that was a technology. They essentially wanted their voice recognition technology, and they wanted a platform in Cambridge. In fact, they asked them to move to Cupertino, and the guy said, no, we prefer to stay in Cambridge. They said, all right, stay in Cambridge. We'll set that up as our satellite in Cambridge. So that's an example of when it can happen on a much shorter time frame. Usually my exits are sort of seven-ish years, 7 to 10 years. There was a company that was acquired in Cambridge last year again by Apple, where the technology actually came out of the University of East Anglia. The company was based in Cambridge by that stage. People thought it was a Cambridge company, and that's where the IP had come from, but it actually come from the University of East Anglia.
And I wonder if that surprises people. We talked about patient capital, and actually, as an angel, you need to be pretty patient. If you're waiting at least 7 years, and it could be 10 to 15 years to build a significant company, as you say, that's a long period of time to be investing at very high risk, isn't it? And I wonder how many people realize it takes that long, and that's sort of reasonable expectation.
Well, I don't think people do, and I think the mistake that is very easy to make, it's very tempting to sell your shares too early. And you've done all the hard work, and the company's really starting to make progress, And it's like the old hockey stick. You know, the real value starts to happen quite late. And that's, so you've got to hold the shares for long enough until either there is an exit, or sometimes there won't be an exit because the company's better placed just simply growing. And therefore you need to find some other means, which could be an IPO on the stock market. But the UK's experience of taking new companies into technology on the stock market is not that good. Many companies go directly to NASDAQ, especially in healthcare. They will go straight to NASDAQ, but they need a certain size. They need to be a sort of $1 billion market cap in order to be meaningful on NASDAQ. So don't sell too early.
Don't sell too early. So everybody, I'm interviewing Simon Thorpe, who's a really experienced angel investor this morning on Strategy Cafe. And we're just going to move on, I think, and talk about the economy and how the scene has changed over the years. I think a good segue into that is to talk about models. So we chatted a little bit about how you make your initial assessment around the team, you know, the underlying technology, and whether there's any sort of defendable IP. And that doesn't really, you know, cover, you know, the commercial model that the business is going to be successful with. So I'm sort of curious about, you know, how many times your investees have changed their business model before they worked out, you know, the right way of doing it. And maybe it's a good conversation just to have more generally, you know, about, you know, once you've worked out that the model isn't right, how quickly to change it, and then just what's going on at the moment. You know, what are the implications of the last 9 months in the global economy and the digitization you referred to earlier, and, you know, shifting model. What are you seeing out there? So perhaps you could just talk about business model for a little bit, and then let's just get into discussing COVID and Brexit and climate change and all the things that are happening right now and how the scene has changed for you.
We won't be able to do justice to any of those subjects in the remaining time. But in terms of business model, there's an old joke. I remember seeing somebody put up a slide at the beginning of their presentation, and they put up the alphabet A to Z, and they said we're at M so far, and that's how many times we pivoted the business model already.
Was M successful?
I don't know. This was a few years ago, so I don't know the particular example. But the point of that was that successful companies do often pivot their business model a number of times, but actually a full pivot is relatively rare. Most companies are iterating. It's a bit like sprints in technology. You're continually iterating until you get it right. And I think what's happened in this pandemic is many companies had to rework their operating model online. So, you know, some of my companies could not go to the US. Probably couldn't travel there, they couldn't go and see their customers, and they certainly couldn't go and meet new potential customers because new customers wouldn't see them. So they had to work out what their online operating model would be. And of course, some companies were really well placed because they were already doing that, but they had to beef up what they were doing. Others weren't doing it at all. They had to essentially create their online model. So that's why I go back to the theme of digitization. You know, businesses have had to accelerate the digitization of their model very, very quickly, and the best companies have done that really quickly. They've also worked out how to get everybody to work from home effectively. You know, some companies were doing that anyway. If you had a bank of software engineers, they were very happy doing that. But if you've got a very strong commercial sales team, they're not so happy.
Yeah, it's been, I mean, across our client base, it's been a very mixed experience. I guess probably more than a third of team members have had to end up coming back in and working together because that's just how it works. But more than half are working from home, you know, and working from home really successfully. And it's surprising how quickly that was achieved across the economy, really. Really surprising. But, you know, I think the pandemic probably arrived at about the time when the UK economy was ready to work from home. So that probably really helped because there were some great tools out there for that.
Yeah. There's an important point here, though, that some of the, you know, in the southeast where we broadly are, and especially if you look at a place like Cambridge, it is essentially a knowledge economy. So most people can work from home. But if you know, I'm doing quite a lot of work in Manchester at the moment, and it is a disaster there because these cities, most of the jobs are not like that. So their economy has suffered really badly. There's also an angle around women as well, because by and large, COVID has not been good for women. But one aspect of it that has been is it's made working flexibly and working from home much more acceptable, and that has been good for women.
And why has it not been good for women? What's behind that?
Because by and large, if you've got care situations in your family or friends, it's generally the women that are picking up the ball and having to deal with that. And of course, and also depends on your children's age. But if you've got children, by and large, if the pressure falls on the women, not the men.
Yeah, yeah. So talk about the shift in the scene. So I know you're enthusiastic about technology, enthusiastic about education, about healthcare as big shifts. Tell us a little bit about that. And I know both of us are pretty optimistic about the upside ahead, having seen the worst downturn in 300 years. You'd think there's some return to the mean would be expected, but tell us what your view is and how that's shared across the angel community.
So I think actually the UK is quite well placed in terms of technology. So if we use artificial intelligence as an example, we are actually the third biggest investor through, if you look at it through R&D, behind America and China. There's obviously a big technology cold war going on between these two countries, which is interesting for the UK because it's somewhere in the middle. It's a little pawn in the middle, and it's got to work out. If you take money from China, will you be able to take money from the US and so on? But the UK is quite well positioned. In fact, it invested as much in AI as the rest of Europe put together. You wouldn't really realise that from reading the press, but so we are quite good at this stuff. So there is a big opportunity for the UK if it thinks hard about the knowledge economy and it thinks about intellectual property, it thinks about how you classify, value IP, etc. So that's all good, but we need to skill people effectively in technology, and that really starts at schools. And we're still very poor at schools in terms of teaching technological and financial literacy. If we had some simple modules on those things, I think we'd make our children much more employable when they leave school or university.
And education going online has obviously been a big feature. I'm curious also about healthcare. I've seen a lot of innovation in healthcare, a lot of AI actually in healthcare. Because it's got a particular application around searching images and seeing things, picking up from the data within images, things that the human eye can't pick up, even the experienced human eye. So it seems to have some fabulous application within healthcare. I'm curious as to what you're seeing. What are the trends coming up in both of those spaces in education and healthcare?
Well, just in healthcare, Curate is a company that's doing exactly what you've just said, Nick. It's based out of Papworth in Cambridge, and it's essentially applying artificial intelligence to the analysis of lung disease. It's doing exactly what you said, because the computer can determine whether there's cancer or some other disease in the lung much better than a human can. And so that's one of many examples that you've seen. And the UK is actually pretty good at this stuff, because you've got the big pharma companies like GSK and Astra. And you've then got lots of small companies that are developing very quickly. So if you look at Cambridge's economy, has been growing at roughly 7% per annum for the last 10 years. And that's been, and life sciences has been growing even faster than that, mainly because Astra moved from Manchester down to Cambridge.
I've seen it also in the space of design for example, for surgical implants. The ability to actually sort of make predictions about how things are going to look, and there seems to be a lot of application within cosmetic surgery for this kind of thing as well. Just sort of the visual aspect of AI seems to be really interesting.
There's a slight variant on that in a company called Eagle Genomics, which is essentially using it's an enterprise software company, but it's applying data around the microbiome. And it's essentially, its customers are big pharma, but they are actually also the big personal care companies, Unilever, etc., for exactly the reason you just suggested.
So just coming up to the hour, we have got a couple of questions. If anyone wants to ask Simon or me questions, go and have a look at the question area on the panel and fire a few in. We've got some questions up there which we'll take in a minute. So if you want to ask some questions and let us have a good go at answering them, then pile them in. I'm just curious, you've been at this now for coming up for 12 years by the sounds of things, and I'm guessing the scene has shifted. So just give us an insight into how much it's changed and what you see as the the trends in angel investing at the moment?
So the whole marketplace has become much more sophisticated, Nick. So when I first started, there weren't really many angel investors. There were a few. Cambridge Angels was set up in 2000. That was very early. Most angel groups have really only set up in the last 10 years. There have been, probably people have heard, lots of what we call incubators, which incubate early stage companies, and then accelerators, which help accelerate their growth. I think there's probably 250 incubators and accelerators in the UK now, and probably virtually all of those have started in the last 10 years. I think there's a much greater recognition of what I would call the Anglo-Saxon equity risk-taking culture. This is, and it's very different from Germany. Germany's, as we know, is a big economy. It's arguably the most important economy in Europe, but Germany doesn't really do equity risk finance. It does bank debt. So their whole culture is completely different. Most of their innovation happens in big companies. Most of our innovation happens in small companies. So you see there's a real difference. And in fact, the UK and the US invest more in intangible assets. Germany still invests more in tangible assets. This is a very different makeup of the economy.
Yeah, so they're still very sort of industrial as a nation, even if that's high tech, very high tech, aren't they? And it is interesting. I'm hopeful with that news, because I think that the innovation curve from a sort of a national point of view has always made the difference at each wave of change. Those countries that are at the leading edge of innovation have been the ones that have then taken the next wave. So that's hopeful news, really, and it's good to hear about the proliferation of angel groups across the UK, which no doubt the competition is sharpening up the whole industry, improving the knowledge and understanding, and increasing the supply, which is much needed. Just in terms of our headline, reigniting the economy, really need entrepreneurs to step up and angels to look after them over the next sort of 5 to 10 years to get us back on our feet after this disastrous year.
Yeah, Nick, there is one other thing we should give a plug for. Some of the UK government schemes do actually work very well. So Innovate UK's grant scheme and loan scheme, they're incredibly good. The R&D tax credits, most companies are familiar with them, but they've been incredibly successful part of the ecosystem. Obviously, the tax release for early stage investing, EIS and CDIS. And actually, the Future Fund has been a remarkable initiative in a short space of time. But the Future Fund is really quite expensive finance. So you wouldn't do that unless you really had to. But some companies have had to this year, and it saved them. So that's good. That's been good.
Thank you very much. So I'm going to wrap up our conversation, and we'll take some questions. We've got a few questions coming. I'm just going to close with a quick pitch for the next session for everybody and let you know what's coming up. And then we'll say goodbye to everyone who has to go now. And thank you all very much for coming today and listening. This webinar has been recorded. It'll be available on our YouTube channel a little bit later today, and we'll send around a link to everybody so you can listen back in. Simon has given some wonderful information, shared some wonderful insight and experience for you all. So certainly recommend picking up and listening back so you pick up the key points there. And next one on the 28th of January is going to be with this lovely gent, Minter Dial, who led Redken and was senior leadership team at L'Oreal and was a groupie for the Grateful Dead, and is a high sports background in rugby and in tennis and in other things as well. A really lovely guy to talk about leadership with in a very, very different kind of space. So go online and you can register now to listen to me discussing leadership from the point of view of a big cosmetics brand and other things with the lovely Minter Dial in early January. So look forward to seeing you all then after Christmas. And thank you all very much for coming today, and hopefully we'll see you next time. So stay on for some questions for a little bit. I'm just going to drop the slides down again, Simon. So Roberto Rivero, hi there, Roberto. I hope you can stay on and listen to the answers. Has asked a couple of questions. So the first one, maybe we'll just I'll put it out there and you can give you a moment to think. But he's wondering whether there are any great books on being a new angel investor. So what should he read? Oh, here we go.
The Invested Investor by Peter Cowley.
Okay, great. The Invested Investor by Peter Cowley. I'll put that in chat. Hang on, just hold it up for a second. So it's
The Invested Investor by Peter Cowley. So Peter is a Cambridge angel. In fact, he wrote this book year before last, I think. But it's got everything that you would want to know. If you want to become an angel, read that book.
great. Michael Shapiro is listening on today. Oh, sorry, there's another one coming.
And if you want to be, if you're a founder, no, I'm not doing very well. If you're founding a company, as an entrepreneur, you want a founder to founder, written again by Peter Cowley. So one for investors, one for entrepreneurs. Founder to founder.
Got it. There you go. Great. Thank you. Michael Shapiro is asking, how on earth do you juggle your time given the involvement in all the businesses?
Yeah, so it's a great question. I think the answer is you've got to be disciplined, and you've actually got to focus on those companies where you have got an active role. Back to your active versus passive question. So of my 30 plus companies that I've currently got in the portfolio, I'm active in 5 of them. So those 5 take priority. The other 25 plus, I'm essentially just trying to make sure I absorb information. So that's the answer.
And then Roberto's asked another couple of questions. So first one is, other than the ability to listen to feedback, what else are you looking for in the founding team? And then he's just curious, you know, if you can sort of really pin down an example of when a business model pivot, to use the sort of the bingo, really made a massive difference.
Okay, well, on that last question, ViewRanger is a good example of that, because we did pivot to a subscription model, and that made the significant difference to, well, it essentially made the business profitable almost within 6 months, I guess.
Wow.
And we were probably too late. We should have moved to a subscription model earlier. So that's a good example. The first part of the question, just help me again, Nick, the first part of the question.
Stay on that one for a bit, and I'll feed you the first one again in just a second. But so I'm curious, what was the business model before ViewRanger went to subscription? Was I just paying for downloads?
No, so the business model initially was try and gain as many users in as many countries as possible.
Right. So it was really just stickiness and building up the fan base, as it were.
I mean, it was quite different. This was going on at about the same time as SwiftKey was happening, and what was happening with SwiftKey was that they realized, and this was also another interesting example of a pivot of the business model. They wanted to be able to sell their application to a big OEM like Samsung or Apple or whoever it was, because they wanted to be able to Apple to sell their phones with ViewRanger already on it. But for 2 guys in a garage to go knocking on Samsung's door in Korea wasn't really on, because they didn't really have any track record. So they thought, well, how do we become a B2B business? Well, we need to start off with a B2C application. So they designed their app, put it out there, and they sold it at that stage. People were selling for, I think it was $299, and it became the #1 paid app in 65 countries throughout the world within 12 months. And of course, then the OEMs came knocking on the door of SwiftKey to say, well, we would like it embedded in our phone, and off they went. So B2C to get to B2B.
Really interesting. And the other question was, what else, apart from listening to feedback, what else are you looking for in the founding team?
Yeah, so I think this whole COVID era has shown some great examples of leadership. So sometimes, I think probably mentioned this to you before, there's a big difference between peacetime CEOs and wartime CEOs. And this period has been like a war, really, in the sense that it's an emergency. And some entrepreneurs have really stepped up, and you can see that they really are the leader that you hope they would be. And some haven't. Some have retreated with the tail behind their back. I think some of their key attributes have been really good communication, really open, transparent communication with their teams, and the best companies have worked out how to communicate effectively with their teams remotely.
Yeah.
And they've made sure that well-being is a really important part of that. That people
Right.
do take a break. They don't sit on a Zoom or Microsoft team call all day. It doesn't do any of us any good. So they work that out. I think resilience is also very important. But ultimately, it's about being a role model. It's leading from the front. So those are some of the things I think that I've seen during this period.
Really good. Thank you very much. Simon, you've been incredibly generous this morning in giving us your time and your insight. I'd like to thank you on behalf of everyone that's been listening. Thank you very much for your time. And that's it. We're going to wrap up now. So thank you, everybody, for listening today. I hope you found it useful, and I hope you have a really good wrap up to the year, whatever's happening for you in this weird revolutionary time, and look forward to the vaccine coming out and all of us getting back to something, approaching, stable business and confidence in the new year. And hope everyone has a good break over Christmas and a chance to get your breath back.
Thanks,
Bye
Nick.
for now.